Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. And as you guys always know we say the charts tell the truth, and it gets proven over and over again. News is very insignificant other than the reaction that you get initially off of it, and you have to be aware of it so you don't get caught off guard. But today was one more day where the charts told us exactly what was going to happen, and it sure came to fruition. So we're going to get into that today being Thursday, March 13th, 2008, and it was an amazingly fun day. I'm just going to tell you guys right now, I had this big smile on my face ever since about 10:30 this morning, and it just lasted all day as we watched this market rally off the lows, and it looked initially like we were going to, just avoid the whole move that we had up. The NASDAQ was down as much as 40 points. Ugly. The Dow was down 200. It was just unbelievably ugly out there, and lo and behold, the NASDAQ roared back, as the charts had told us it would probably do, and we closed up almost 20 points on the NASDAQ. That's a 60-point reversal on the NASDAQ. That's huge. And the Dow came back from being down over 200 to close up 35.5 points. And this S&P was up almost 7 points. And it was just amazing because, you know these technicals work. I should say I know. InTheMoneyStocks.com, we do this research. We come to conclusions. But to see it play out is a thing of beauty. And you guys know we've been pretty much right on every call here over the past year, believe it or not. Ever since the drop, calling this consecutive January fall and so forth, all the way to the bounces on these little smaller bounces we're seeing, like we talked about Monday into Tuesday, and now looking for that pause day yesterday and continuation possibly today. And we'll see if it happens tomorrow. We definitely knew that it was either going to be, and we mentioned this in yesterday's video, an IMS, an In the Money Stocks TNT play, or an IMS 123 play. And, we went over into a little bit. I can't really go into that more than that on these videos because these videos obviously are out there just for everyone to view. We like to keep a few things to the paying subscribers and really get into the webinars. You take the webinars, we can divulge this stuff, obviously. And there is a webinar coming up on April 5th, and the following Thursday, Friday, which is 2 hours each night. So it's 4 hours in total, just phenomenal. You can go look at that on the website under webinars on InTheMoneyStocks.com and find that out. But all I can say is this, guys. You're looking at the intraday ES chart here, and in fact, what I'm going to do, I'm going to switch it over to the new contract. We're the ES M8 contract now, and there we go. And what you did see this morning was an ugly gap down. There's no other way to describe it. We saw the market gap down, actually sell off to new lows right here, but the charts were telling us yesterday that yesterday was a pause day before continuation. The market the prior day had shown us some key indicators, some key proprietary analysis techniques that we use to see that the market had changed direction in the near term. Now, it hasn't changed in the long term. And I really want to be clear on this because it's not like we're going to be huge bulls here. No way. You guys know we're traders. We're neither bull nor bear. We kind of sit on the fence, and when the market's going to go down, we jump on board for the downside, and when the market's going to go up, we jump on board for the long side. So we go short, we go long, depending on which way the market's trending. And ultimately, we have been expecting this little bounce. We're getting it now. We saw a beautiful pause day yesterday, followed by a great reversal, and I can't express to you how powerful that reversal is. Look at this reversal, by the way. I mean, this is powerful. This is the intraday 10-minute on the ES, and this is what we use to go over this. But this was a powerful move. You got a little push to the 200 here, you got a little pause, and then a blast off through that, and then you got a little bit of a top made right here. A possible little bit of an M pattern, but it never had time to play out as the market did close. But you can see it played out a little bit, ultimately. But long story short, you can see the nice top, you can see the hit of the 200 MA on the first pattern with the pullback, then a blast up again, just taking that MA out. When you take it out on two hits, when it only takes the second hit to go through an MA, a moving average, that's a powerful upswing with a lot of buying behind it. Now, volume today in the market was very, very big, I'll be honest. All right, you had the old contract trading still. They overlap a couple days. You had the new contract trading. We did over 3 million contracts in total. That's a very, very powerful up day in volume, and it was great to see. Continue to push our theory that we will get a bounce here before the next leg down. And by the way, this next leg down is going to probably take out January lows and go much lower. So we got to all be prepared for that. But at the same time, we can all play the upside. Why not play the upside and then play the downside? Let's make it on both sides. All right, so that's what we try to do at InTheMoneyStocks.com. I encourage everyone to take the webinar coming up. There's 2 dates posted for it. If you can't make one, you can make the other. And even so, we're going to look to plan a new one. So if you need a date that you can't make, if one of those 2 dates is no good for you, you email us, you let us know. We'll try and plan one on that day so that we can just put out a new date for that following. And again, it's the Apprentice webinar, but we do divulge a lot of these secrets we use in those webinars. Swing trade alerts, can't speak enough about that. The intraday e-mini / day trading stock chat, just great room right now. We had so much fun today just watching these stocks. So again, let's talk a little bit about the daily, but intraday, you can see again, just a power move after we came down. Now, we got some emails yesterday, and there were multiple emails, quite a few emails, talking about how we were way off the top here. We were way off. They were saying retail sales this morning were going to be horrible, and these are last night's emails. And just how this market was going straight down to new lows, and we had no, they didn't know what we were talking about. We were just way off the ball here. And this morning it looked like that might be true. It looked very plausible that we had no clue. But ultimately, the charts tell the truth, guys. When it comes into charting here, there's three things you need to pay attention to: price, pattern, and volume or time. Time is very key. Volume also is very key, and price and pattern. Pattern, I can't express to you how it means everything. It means everything. All the other indicators, and we got another email I just want to touch on, which is a great email. It asked, why don't you guys focus more on MACD, stochastics, RSI, CCI, and all this other stuff? Those are all lagging. So just keep that in mind, is that they're showing us what happened before, and it's only giving us a general idea of what will happen in the future. Pattern is what's setting up for the move. So if you can read pattern, for instance, if you can know that this is a pullback off a moving average and a bullish pullback, and then you can base that you have good support down here off the moving averages. It's a beautiful pattern for another blast off. Just like the reversal 2 days ago showed us that we'd probably get that pause, or more likelihood of a pause, which would yield us another thrust motion. In which case we got off the lows today. I mean, it's a 60-point reversal on the NASDAQ. That's humongous. So anyways, long story short, pattern is so key, and it's something that every investor or trader should know, because these guys that in the media just don't even understand it. I mean, this is stuff that you're getting in-depth stuff that the market doesn't, the media has no clue about. And we bring that to you, and we try to in the chat room, and we try to do it in the webinars and so forth. And private consulting too. We consult for lots of different individuals and institutions, and are willing to do more, obviously, if you're interested in getting one-on-one attention. All right, we keep it as cheap as we can, very, very cheap, in fact, an hour just being $199.95. Long story short, let's go to the daily here. I've been blabbering enough here, but I just can't get over how beautifully the charts played out for us. You can see the gap down on the ES here. This is the SPY. I just flipped to the SPY because I wanted to show the gap down. All right, here's the gap between here and here. This is where we opened. All right, you can see. Look at this. All right, remember on the ES chart where we hit the 200 intraday and we pulled back? That's the equivalent of this point right here on the SPY. Where does that point coincide? It coincides right with the gap fill. And this is one of the plays we love to preach, and I don't want to get into it too much. I feel bad, just talking about it, but you guys know I'm a student of this game, and we are always students. We always continue to learn, so I want everyone out there to learn, and just continue to learn. But notice how that same reversal, which coincide, by the way, and I want to show this again, on the ES, this hit right here. See how it was the 200 moving average? Well, on the SPY, it coincided with the gap fill, and it's a shorting opportunity. So you had two indicators there telling you to jump on the short side for a little pull down. Now, obviously, anytime you're in a bull mode like this where you've rallied so far, you have to expect the market to make another move. So you look for that 50 moving average hit, you exit that position just for that short scalp there, and it becomes a long again. Sure enough, we blasted all the way up, and you can just see the magnitude of this rally. From the lows here to the highs here are tremendous. Okay, now let's look at the daily, because now we're getting into some interesting stuff. So again, we had the big sell-off where we basically retested the January lows here, and you guys can see that right there. Here's January lows, and again, this we kind of ignore. I've been ignoring this more and more because this is where that SocGen trader news came out, so it really was a panic sell. So ultimately, you had a touchdown there, a little lower, and it was more so the lows here were tested. And then you got that blast up on Tuesday, Wednesday pause day. Thursday was the gap down, which was today, and we had that massive rally off the lows. And again, the question now becomes, watch that 20 moving average on the upside. Watch the 50 after that. The 50 after that could be tested. And we do anticipate, listen, the CPI is coming out tomorrow. You guys know how we feel about data. Data is basically just the chart pattern playing out. So if you have a positive divergences in various technical indicators, which we do follow the divergences. I don't want to get into more than that, but if you have a chart pattern that signals a bull run coming, then a news event, let's say tomorrow morning, that just coincides and causes the bull run, and then the media can say, oh, well, it was because of the news. Really, it's because of the chart pattern. It was setting up for a move. It was just the anticipation or the analysis of that news that comes out. Just like the retail sales today. Ugly retail sales at 8:30. Initial jobless claims not pretty. You had margin calls across the board, but ultimately, the market wanted to go up. So it didn't matter what the news was, and I hope everyone's understanding this and really grasping this as I talk about it. It doesn't matter what the news is, it's how the market reacts to it. So initially you get the panic sellers, you get the large money to push the market down, so ultimately it gets all these like amateur shorts on, and then once they get that on board, oh, the market was going to go up, boom, they slam the buy programs in. All these shorts have to cover, and it causes a massive squeeze. So anyways, long story short, guys, the charts tell the truth. Can't express that enough. Come join us with the chat room. Just a tremendous video chat room. Not a video chat room, excuse me. We do voice in the chat room. Here you can see the NASDAQ, and NASDAQ's approaching that 20 moving average. I still favor this breakout line. So we got to watch this. All right, notice how it's coinciding with the 20. You get through this line, you're going right here to the 50. So watch that as well. Enough of me blabbering today, guys. Just come join the Swing Trade Alerts. We're in 5 plays right now, the most we've been in a while, but we do believe in them. And also come join the chat room, do the webinar. We'll talk to you guys tomorrow. It should be another interesting day. Take care.